Hello, everybody, and welcome back to both of my shows because I'm going to air this on both of my shows because it seems like the stock market has flipped to the upside and the crypto market has flipped to the upside. And right now, I'm going to give you a briefing about the FOMC. I just did a full live for the last 2 hours. Thank you, everybody who joined my channel. Guys, I have 2 channels. A lot of people don't realize this. I have a crypto channel called The Adam Bergman Show, and I have a traditional finance channel for stocks, real estate, and the general economic environment called Adam Bergman's Money Makers. Depending on what channel you're watching, please go to the other channel if you're interested in cryptocurrency or traditional finance. With that said, let me give you a quick abbreviation of what happened. Jerome Powell came out and they said that they had a unanimous decision to lift the federal funds rate by 50 basis points or 0.5%. In the last meeting, they raised it by 25 basis points or 0.25%. It was widely assumed that it will be 0.25% and we might get a 0.50% raise, which we got now, but the rest of the year we will get 0.25s. Well, after this meeting now, it is understood that we will get at least for the next couple of meetings, so at least in the next meeting and the meeting after that, we will get a 50 basis points rate hike. And possibly after that, we will get a 50 basis points, or if inflation is going to start going in the downtrend even a little bit, Jerome Powell did said that they might go back into dovish mode instead of hawkish. Hawkish means aggressive, dovish means less aggressive or passive, and bring it down to 25 basis points instead of 50 basis points. He says that they have several tools at their disposal. Their tools are reducing their balance sheet, increasing interest rates, and forward-moving statements. It's very important to understand that last one, forward-moving statements. Why? We've been getting herded the entire time. What they're telling you on TV is just what you want to hear sometimes, or they're softening the blow for what they're going to do in the future. I truly believe the entire time they knew that they would be raising it 50 basis points. And then a couple of days ago, somebody mentioned that it's possibly going to be 75 basis points. Well, it's funny, when they're raising it by 25 basis points, they know they really want to raise it by 50 basis points. So they soften you up with a couple of jabs, and then they're trying to give you the uppercut and saying, no, it's going to be 75 basis points. When everybody's scared of 75 basis points, they give you 50 basis points to soften the blow because you were expecting now 75 basis points. So a lot of things have absolutely been priced in with the prices, and that's the reason why the entire market is starting to go up right now. But let's reverse really fast. Well, what is the point of the Federal Reserve? They have 2 mandates. They need to increase employment and they need to increase price stability. So that's the whole point of the Federal Reserve. Increase employment or reduce unemployment, and increase price stability or decrease price instability. It's all the same thing. That's the only thing that they're doing. And they're doing it by those 3 tools that I just mentioned. Reducing balance books, reducing assets on their balance sheet, increasing or decreasing the federal fund rate, and forward-moving statements. So now we got a forward-moving statement. We know that we're going to be reducing the balance sheet. I believe he says that we're going to be reducing the balance sheet by $90 billion a year. We have total $9 trillion on our balance sheet. $9 trillion on our balance sheet. It's absolutely massive. The inverse of quantitative easing, which is money printing, is when you're buying assets from the open market. What happens? You buy, which means you take, you put it on your books, and from your books or from your coffers, you put money into the economy. That's quantitative easing. You're easing the economy little by little. The opposite is what we're having now, called tapering. Tapering means something big, and it's funneling down, 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 which means you're reducing. What does that do? You're taking what's on your balance sheet. You are now selling it into the open market. The open market is now reducing the amount of money they have and paying the Federal Reserve, which means you're reducing the amount of money in the open market, in the open economy. And that's what they're doing right now. If you've noticed, these are words that you've been hearing for the last 2 years. Tapering, quantitative easing, inflation, deflation, federal rate hikes, stuff like that. Balance sheet, mortgage-backed securities, bonds, yields, all these things are stuff that you're very familiar with and you don't even realize that you're hearing it and seeing it every single day for the last 2 years or so. In general, people are very bullish with what they heard today, or a little bit more positive than negative. Why? Because we've been so absolutely hammered. Don't forget, the worst start in stock history when it comes to growth tech sector, NASDAQ, has been happening right now, quarter one. We've never had a worse 3 months than this. The unemployment rate is very strong. What are you scared about? You're scared about a low unemployment rate. If you have a strong unemployment rate and then you raise your inflation, well, then the risk of a recession is reduced. Although I believe we are in a recession now. A recession is 2 negative GDP growths for 2 quarters. We had a negative GDP growth of quarter one. We're currently in quarter two. We won't know about quarter two results until quarter three when we get them. So it's quite possible that we are already in a recession. Now, if we are in a recession, which means that the prices of stocks can quite possibly be bottoming out right here. And by raising the interest rates, if somehow, some way this stimulates or destimulates the inflation in our country, it's possible that we're going to get 25 basis points as opposed to the 250s and then another 50 and another 50. And if we can reduce it to 25 basis points in the next several meetings, well, that means that's also bullish territory, bullish sentiment. It's almost like everything sucks. This is not great news. However, it is slightly better than the news that we possibly could have gotten. And because we're at 52 weeks low for a lot of the sector, people are like, well, this is great. It's not as bad as we thought. So everything's starting to move up. The unemployment rate right now is 1.9 to 1. What does that mean? That means that there are 1.9 positions for every person looking for a job, which means supply and demand. Supply and demand is not just for goods. Supply and demand can also be for labor and a bunch of other things in this world. That means that the demand for work is 1.9, while the supply for workers is 1. He wants this to come down, and he would prefer a 1-to-1, although he says that that's not their goal. This is just one of the indicators in the economy. They had the strongest unemployment rate in quarter one that they had in nearly 50 years. The current unemployment rate in March, I believe, was 3.6%. He did mention what's happening with the invasion of Ukraine, and he says that this is contributing to possible global inflation, which then hurts United States inflation. He says that his tools at the Federal Reserve only have an effect on demand. He cannot affect supply. Supply chains are bottlenecking when there's not enough material to make what you need, and because there's not enough material, survival of the fittest. Who's willing to pay more money will get what is being produced. Because there's not enough production for the demand, that means that the people that are willing to pay extra are actually going to feed their demand and be able to get the products. He said he cannot control the supply. And what's happening right now in Ukraine with the invasion and what's happened with the geopolitical uncertainty in Europe in general definitely increase inflation even worse. He did mention that that is one of the reasons why we're having such high gas prices. I call bullshit on that because I think we had severe price hikes before this happened. I believe it happened in March, if I'm not mistaken, something like this. Well, the gas prices was already super expensive. I believe that he mentioned the geopolitical uncertainty in Ukraine right now because it's kind of like a deflection, like, oh, don't look at me, look over there. That's kind of what he's doing right now. Like, he's like, okay, let's blame Russia for some of the things. However, I'm not picking sides here, but this is not Russia's situation. Yes, they did contribute. This did contribute a little bit to what's happening. But we don't really we don't really have a crazy demand or necessity for Russian oil. I believe they only supply us with 3% of our needs. The rest of the world, Europe specifically, is like 40% if I'm not mistaken. So it's really not that big of a deal in the United States, but he did mention it. He did say that our prayers go out with all the people in Ukraine. By the way, guys, on Friday, I will be having a fundraiser for Ukraine. It's going to be on my channel at 9 o'clock Eastern time. I will be speaking to somebody who's running a children's hospital in Kiev. These are people that are getting hurt during this war, and we're trying to do a fundraiser. I will have somebody that's doing translation for me who speaks perfect English and perfect Russian in case I can't get some of the translations out. And you guys can ask questions. I'm going to be asking them about what's happening over there. I'm going to be asking what's happening in the hospital. So definitely try to join me at 9 o'clock this Friday for a live on my channel. Guys, that's pretty much what Jerome Powell said. That was pretty much the FOMC meeting. We got 50 basis points. Probably we're going to get 50 basis points for at least another 2 or 3 meetings in the future. If inflation starts to come down, we will start getting 25 basis points instead of the 50 basis points. They said they're still trying to target 2% inflation rate over the long time. I think they're trying to get it down in the next 3 or 4 years. They're not going to get it down. It is what it is. The stock market is going up, the crypto market is going up, and this is my brief for you guys. Please don't forget to give me the likes, the shares, and subscribe. And if you are not subscribed or you don't check out my other channel and you like crypto, check out the Adam Bergman Show. And if you are not subscribed and you want to check out traditional finance, definitely go see me at Adam Bergman's Money Makers. I'm going to upload this to both of my channels. Thank you and have a great day.